Hi, this is Jinrong, market strategist for IG Singapore. The S&P 500 has delivered its third straight week of gains as bearish bets continue to unwind on dovish Fed rate expectations. Dips in US Treasury yields continue to weigh on the US dollar this week, while gold prices attempted to recover, seemingly setting its sight at the key psychological $2,000 level next. As we head into the new week, here are three things that we have on our radar. First up, we have the RBA meeting minutes on Tuesday. Upward revision in inflation forecasts have called for a 25 basis point move in November, which marked the central bank's first rate increase since June 2023. Nevertheless, markets perceive the decision to be a dovish hike, and the upcoming minutes will be scrutinized to see if the RBA will act on its tightening bias over the coming meetings. If you look at the Aussie dollar, having been stuck in a consolidation range since August this year, it is currently attempting a break of its upper bound resistance at the 651 level. That may set the stage for a retest of the 674 level if the RBA minutes provide the go-ahead. Next up, we have the FOMC meeting minutes in the wee hours on Wednesday. Recent Fed speak suggests that US policymakers have left the door open for rate hikes, but noted that tighter financial conditions were likely to weigh on economic activities. The minutes will likely reiterate the Fed's more cautious tone, while noting that rates are expected to stay higher for longer. For the US dollar, sellers seems to remain in control with a push to a new 2-month low. A bearish crossover was formed on MACD alongside a dip in the RSI below the T50 level, both of which points to negative momentum. The 103.12 level will be immediate support to hold. Failing to hold may pave the way towards the 100.5 level next. Lastly, we have Japan's inflation rate out on Friday. Recently, the Bank of Japan governor acknowledged that Japan was making progress towards sustainably achieving the central bank's 2% inflation target, but he also guided that there are still some distance to cover. A softer inflation rate will likely offer room for the Bank of Japan to normalize its policy at a more gradual pace, which could be a dovish takeaway for markets. Nevertheless, the dollar-yen has been taking its cue from the US dollar weakness, recently moderating from its decades high at the 152 level, as its daily RSI dips below the T50 level as a sign of near-term downward bias. A retest of a lower channel trendline support at the 146.8 level may be on the cards, and failure to hold the channel pattern may risk a wider trend reversal in the coming months. That's all for now, and I will see you next week.